Welcome back to another video for HarborFinancialOnline.com. Today I'm going to be talking about capital gains tax rates and how it affects you, and to explain to you what capital gains tax actually is. So let me get the video started and we'll walk through this together. So when you sell a capital asset and receive a profit from it, that's called a capital gain. Examples of this would be if you sold a stock, a bond, mutual fund shares, real estate, a home, furniture, a vehicle, car, copyrights, musical and artist compositions, memorabilia. Any of these items that have value to them and you sell them, that's going to be considered a capital gains if you make a profit from it. Now you can sell these items and have it a loss, and that would be a capital gains loss. And further in the video I'm going to explain how to treat both of them, how to treat a capital gain and a capital loss, and how you report that on your tax return. A capital asset is either short-term or long-term. Short-term would be 1 year or less. Long-term is going to be more than 1 year. These items that will be reported on Schedule D, and Schedule D is attached to your regular tax form, your 1040. I'm going to take you to the Schedule D and show you the form and explain it to you for filling it out and reporting these capital gains or capital losses. Now, like I said, you can report a capital loss. You're allowed to report up to $3,000 a year. And how this works, a lot of the times you're going to have more than $3,000 in 1 year. And the IRS allows you, you're capped at that $3,000, but they'll let you carry forward any more losses. So say for example you had a $5,000 loss in 1 year. You're allowed to report $3,000 of that in a single year, so that additional $2,000 that you can't use in that year, you could carry forward to the next year as a loss. And how that can help you is that, say in that next year you had a gain on other stocks, well, you can take that loss from the year before and do the difference of it, so you could offset your gains. So that's a nice bonus with carrying forward these losses. Now, you can't deduct capital losses if the transaction was with a family member, so you need to remember that. A lot of people overlook that and don't even realize that that's a tax law. So make sure if it's with a family member, you can't report the loss. But if you have a capital gain, obviously you have to report it. They just don't want you to get the advantage of selling items to family members and reporting all kinds of losses, or everyone would be doing it. Now when you sell your home, you don't have to report it as a capital gain. If this is your main home and you sold it, for example, if you're single, you're allowed to have a profit up to $250,000 on that home and not report it as a capital gain. But if it goes above $250,000 and you're single, earn a profit on that home, you have to report it. What I mean here is, say you bought the house for $100,000 and you sold it for $400,000. Now you have a profit over $250,000. That amount above and beyond $250,000 has to be reported as a capital gain on Schedule D. Now if you're married, the threshold is doubled to $500,000. So you can use that same example but double the figures. You can earn up to $500,000. Now this applies, these income limits on the sale of a house applies if that's your sole home, but normally you aren't going to have a profit that big on selling your home. And you're only taxed on the profit above that $250 for single and $500 for married. Now if you want to see how some of these capital gains and losses would affect you, you can use our online tax calculator estimator and put the sales of these assets into that estimator and see what it's going to do to your taxes, just so you can get an idea for the upcoming tax season how much tax you may owe, or how a capital gains loss will increase your refund, because it will be a big difference in your refund. So I'm going to take you to Schedule D. I want to show it to you guys real quick. First, this is our website, harborfinancialonline.com. You can use the estimator here and prepare your return directly off the site. So you get a chance, check this out. We have lots of good information on tax and other credits. Now, here's the Schedule D. This is where the sale of the assets are going to be reported. You have short-term in part box 1 and long-term down here. So you're going to need the information of the sale of those assets to complete this form. Now, if you complete your tax return online, it's automatically going to complete this form with you and just ask you a series of questions regarding the sale of that asset. Okay. The IRS offers a lot more information if you want to check it out on capital gains and losses too, if you need to get a little more detail on a particular item that you sold to see if how it's going to be treated for a gain or a loss. Again, check out our website, harborfinancialonline.com. You can do the return directly online here, or just use the estimator. It's a good website for any area of credits and deductions and reporting income if you're unsure about an item. Okay, so if you guys have any questions about capital gains tax, send me an email, expert@harborfinancialonline.com. I'll answer any questions you guys have. Thank you for watching the videos, and hopefully you'll check out some of our future videos.